Hi everyone, welcome to another video by Optionables. My name is Saket and today in this video we are going to look at what happened to the markets, what we can expect from the markets tomorrow, and also what happened to our trades. So before we start off, there are a couple of important things which I would like to tell you. First of all, we are out with the internship results where we have selected 17 people for the final interview. The same list has been put out on community tab and I would request you to check out the same and see if you have made it to the top 17 or not. So you will be receiving the mail by Wednesday and we'll be having the interview soon. And next, coming to our mentorship. So yesterday we had a short briefing on the mentorship. So all the mentees came to Bangalore and we had a first meeting. So we discussed on what trades we'll be taking for this entire week. We also discussed some positional strategies as well as intraday strategies. So today we ended up taking the trade. So more or less we took the same trades, but a few people also added some discretionary into the trade like how we did, and even that turned out to be really well. So this is the first day what we had, so we still have 4 more days to go. So next, moving on to what really happened to the markets. One more important thing is I am making this video almost after 4 days. So I think the last video we put up was on Wednesday. After that we haven't put any video. So on expiry, that was on Wednesday itself, on expiry we made an overall profit of close to 3.85 lakh. So I hadn't given an update on that. Suppose that Thursday, Friday we had a holiday, Saturday, Sunday we had a holiday, and today we ended up losing totally around 1.9 lakh. So the reason for this loss is mainly the positional trade. Intraday trade we ended more or less with no profit and no loss, but in positional trade we had a naked short strangle, and opening itself there was a huge gap down. The gap down further got extended because of the sell off, and our loss also got extended towards 1.8 lakh. So I'll be discussing in detail what was the trade and why exactly we ended in loss. And apart from that intraday trade, so today we saw a complete V-shaped move, but we added some discretionary trades to make sure that the position was not that bad. So if not for the discretionary trades, the position might have been well over 1 lakh loss, but due to the discretionary we were able to restrict it. Actually we ended with around 8 to 10,000 positive. So this also I'll be discussing in detail towards the end of this video, where I'll be showing you the screen recording. And now coming to what exactly happened to the markets. So needless to say, the big list of heavyweights, HDFC Bank, Infosys, when all of them fall between 4 to 7%, there is absolutely nothing more required to say. There was absolute carnage in the market. It fell almost close to 2%. Nifty lost almost 300 points. Bank Nifty lost almost close to 750 points. Towards the end, good thing is we saw that the market took support around 17,100 and bounced back, but overall the sentiment was quite negative. So when we look at the gainers, FMCG, metals and auto, all of them did really well, but the thing is their weightage in Nifty is very low, so they won't be having any significant impact on the Nifty movement. Here we, on one side we have TCS, Infosys, HDFC Bank pulling down the market, and on the other side, no matter what auto stock does well or what FMCG stock does well, it won't be adding so much of a weightage. So even if you look at technically, market has broken its important support levels of 17,300 quite decisively, and towards the end we saw some recovery, which does show that we might also find some support near 17,000. So that will bring us to the next question, what we can really expect from the market tomorrow. So that is something we'll be discussing on the screen recording, where we'll be looking both at Sensibull open interest as well as the chart, and we will see what exactly the market data is suggesting, what we can expect from the markets tomorrow. So now we'll be quickly moving on to the screen recording, and meanwhile if you have liked the content, do not forget to hit the like button, share this video as well as subscribe to Optionables. Thank you so much for joining, guys. Hi everyone, welcome to the video. So what I have opened right over here is our intraday trades in Nifty. So mainly today we stuck with 17,200 CE as well as PE. So I'm going to tell you the logic as to why exactly we did this, and also today was a complete V-shaped move and many times the stop loss got triggered and we were still able to manage it because of small adjustments, which I'm going to discuss in this video. So this is the intraday positions only. And now when I actually show you the overall positions, so I would have to add everything back. So when I do that, you can see that overall we have a loss of around 1,85,000. So this is the total loss we have had for today. So all the loss what you see over here has come from the positional trade itself. And the thing is, today we had a short straddle, that is 37,100 as well as 37,000, not exactly a short straddle, an inverted short triangle. So this I squared off at a very bad price. So this I squared off somewhere around 660 and 220. If just held till the end, easily we could have recovered over 1.2 to 1.3 lakh, and overall we could have just ended with around 50,000 loss. So as we can see here, today morning the markets fell almost around 170 points in the opening itself, and from further there it fell again around 150 points, and intraday it almost went down close to 400 points. So from previous close to the intraday low was almost close to 400 points. And later towards the end, we saw some good bounce back where the market ended towards 17,200. So the major reason for fall, as we discussed, was the fall in HDFC Bank, Infosys and HDFC. So even after the market opened, there was still weakness in these three counters. So first trade was actually supposed to be 17,250. So this was the short straddle which we were supposed to do at 9:30. The reason is market was trading somewhere around 17,230. So as per the rules, we had to go for 17,250. But here what we ended up doing is we went for 17,200 itself. So even though the market was trading higher by 9:30, we went for 17,200 CE as well as PE. So here is where we started discretionary from right away. From the very first trade, we started taking discretionary trades. So as the market came down here, the put leg stop loss got triggered, and now we were only left with a call leg. So once the market fell, our put leg stop loss is triggered, and we are only now left with a 17,200 CE short. So then we saw some good consolidation, and at 11:30 again, so we had to enter a 17,150 short straddle. Market was trading around 17,150 itself, and we had to enter a 17,150. But what we did here was we again ended up entering a 17,200 short straddle, both 17,000 CE and PE. So the reason for this is fairly simple. That is because we already have a call leg short. The PE has triggered and we already have a call leg short. If the market continues to slide down like how it did, then obviously you are going to be in profits. So now we are only concerned about a V-shaped recovery where the market ends up heading higher and a stop loss actually gets triggered. So that's the reason, even though we were supposed to go at 17,150, we ended up going 17,200 short straddle. So again the market ended up sliding down and PE stop loss got triggered. So now we are left with two call legs, that is 17,200 short 2 times or 2 lots. So now all you want is the market to actually slide down where you will end up making a profit. So as the market came down and made a bottom over here, our profits did go up almost around 40k. So all we were expecting is, even if Nifty consolidates here, or even if let's say Nifty ends up falling further, easily we will be able to cross around 1 lakh. But unfortunately for us, the market started to come up from here. So the thing is, what we saw was there was no retreat from the market. So every red candle, so you can see a red candle right over here, was followed by continuous green candles. So as soon as we saw a red candle, again we had continuous green. So even here we saw red, then we had a continuous green. So the thing is, every time the market fell, immediately there was buying coming in. So this was a pretty good sign. Maybe the market has made bottom for the day, because we are not seeing any big fall happen. So that's the reason what we decided was, even though we were supposed to take a 17,100 short straddle at 1:30. So based on the rules what we follow, we had to take 17,100 short straddle. But instead of that, again we ended up taking 17,200 short straddle itself. So the reason to this is fairly simple, that we were expecting the market to consolidate or find support at the lower level. So if it was bouncing back, we already had two short legs of 17,200 C. So there were already two short legs. So the only fear was the market bouncing back, because we'll be hit on the double side stop loss 2 times, and if the market continues to slide, then there is no problem. So the market did end up bouncing back. As it started bouncing back, we added one more leg of 17,200 PE. So one more thing you should note is when I say 3 lots, so here I am referring to lots as one entry. So in each entry we have 2000 quantity. So to give you a perspective, we were left with 6k quantity of C and 4k quantity of PE. So the market did come up, and this particular stop loss got triggered like how we expected. It was a complete V-shaped recovery, and obviously you expect the stop losses to get triggered. So as the stop loss got triggered, now we are more or less left with 2 legs of 17,200 calls and 2 legs of 17,200 puts. So now the market consolidated in this range itself almost till the end, and we got some great decay. So while these stop losses got triggered, our loss had gone to somewhere around 50k negative. If no adjustments were done, then the losses could have easily gone all the way up till 1.3 to 1.5 lakh, because it was a complete V-shaped move. So because we were able to do some adjustments, we saved quite a lot on our M2M, and we actually ended today with a positive note. So when I run this on stock mark, you can see per lot the loss is close to 2,394 rupees. That means we did a great job, because if we had run the entire system, the overall loss today would have easily been on 80 lots somewhere around 1.6 lakh. And today we were able to end with around 10,000 positive. So not that always the adjustments are going to be useful, but today it did, and that's a pretty great thing. And now we'll be quickly discussing on what we can expect from the market for tomorrow. So when we come to option chain for Nifty specifically, we do see a lot of call writing, strong call writing at 17,400 and 500. And no doubt that 17,500 is going to be a very strong support for this, very strong resistance for this particular week. And I personally do not expect markets to cross 17,500, because we have seen a huge gap down and the markets are consolidating around 17,200, and at higher end we have a huge call writing, so that might restrict the market from crossing 17,500. And one more thing positive is we have some strong support at 17,000. Today also we saw, as soon as the market came towards 17,000, we saw some buying coming in IT stocks, which actually took the Nifty higher. On the put side, 17,000 again has the highest OI, which definitely indicates some sort of good support. And one more thing we should note is that even 17,200 puts has significant amount of puts written. So even though the overall number of puts is just around 40 million, so we do see some significant put writing at 17,000 and 17,200. So overall the trend is definitely bearish, and I am not personally expecting markets to cross 17,500 by this expiry, and we should be expecting some support to come in at 17,000. So this is the broader view what I have for Nifty. And when we come to Bank Nifty, so again we have seen Bank Nifty break very crucial important support levels, and we can also see that on the open interest also there is huge amount of 37,000 call writing. So obviously when we look at the overall open interest, we do see a large amount of call writing compared to put. So this is a clear sign of bearishness, and personally I am not expecting markets to cross 38,000. So this is something which I personally don't expect the markets to breach, and on the lower side I expect the markets to find some support at 36,000. If we were to talk about a much narrow range, then I would be looking anywhere between 36,000 to 37,500. The reason for this is pretty simple, because right now the trend is bearish and also there is very strong call rating which we can see. So if you are asking for a broader range, then it would be from 36,000 all the way up till 38,000. So Nifty I'm expecting between 17,000 to 17,500, and Bank Nifty I'm expecting from 36,000 to 38,000 as the broader range. So overall the trend still remains to be bearish, and Nifty and Bank Nifty have broken their crucial support levels, and in case if there is no follow-up buying, then obviously we can expect the markets to head lower from here. So today also FIIs have continued to sell. Today the sell figure is not small, but it is close to 6,300 crores. So it looks like that FIIs have again started their usual selling, because like especially in March month we did see some kind of cool down from FII selling only towards the end, but as the April month started, again they have started selling. If you actually look at the data, so from April, except if you remove the month of September, they have been continuously selling. And forget about that, in 2022 alone, so we are hardly 4 months into the year, FIIs have sold close to 1,50,000 crores in this year alone. Last year they had sold the entire 2021, in spite of selling from April, they had sold close to 91,000 crores, but 2022 alone they have sold close to 1,47,000 crores. So no way it is a great number to be seen, but DIIs are supporting the markets with whatever they can. So they have also bought somewhere close to 1,12,000 to 1,15,000 crores for this entire financial year. Let's see what we have in store for tomorrow. So I'll be catching you tomorrow with the trade updates, and I'll also be telling you what exactly happened. And with this, we also come to the end of this video. If you have liked it, then please do hit the like button, share this video, and subscribe to Optionables. Thank you so much for joining, guys.